When you think of California, images of sunny beaches, Hollywood stars, and healthy smoothies might come to mind. But beneath that glossy surface lies a harsh reality affecting millions of car owners every day. On one side, there are cozy suburbs and highways basking in sunset light. On the other, a car theft statistic that sends chills down the spine. This story isn't just a news flash. It's a deep dive into why California has consistently topped the charts for auto theft in the U.S., what economic and systemic forces feed this problem, and what car owners, insurers, and manufacturers can do about it. When we talk about hot spots for car theft, many imagine dark, abandoned streets or sketchy parking lots. But reality is far more complex and economically advantageous for criminals. California isn't just a dot on the map, it's a sprawling cluster of megacities: Los Angeles, San Francisco, Oakland, Riverside, San Diego. Millions of people, millions of cars, dense urban fabric, and bustling street life, all creating fertile ground for crime. According to the National Insurance Crime Bureau, NICB, more cars were stolen in California in the first half of 2025 than in any other state. Even as nationwide theft numbers have dipped slightly, California holds its lead with confidence. This steady dominance points to systemic factors, not random spikes. Key reasons include massive vehicle population. More cars mean more targets. Plain math, the chance of theft is directly proportional to the number of vehicles. Urban density. High population and vehicle density make crimes faster and less risky for offenders. Climate conditions. Warm weather lowers barriers. Drivers often leave windows cracked or doors unlocked, especially during short stops. Organized crime and parts market. Large cities host entire networks specializing in stealing and dismantling cars for parts, which are quickly sold on black and gray markets. Viral social media content. Technology and viral TikTok videos have made life easier for thieves, showing how to bypass security on some models. Criminal networks eagerly took advantage. Each factor alone is significant. Together, they make California a perfect storm for auto theft. 2025 data reveal a troubling reality for manufacturers and insurers alike. The list of most stolen cars in California nearly mirrors the national top 10. Leading are popular brands: Honda, Hyundai, Kia, Chevrolet, Toyota, and Ford. This isn't necessarily a quality issue, but a combination of widespread presence and known technical vulnerabilities. Top 10 Stolen Cars in California 2025. Special attention falls on Korean brands Hyundai and Kia. Models produced before 2022 had ignition system weaknesses that made them easy targets. When TikTok videos demonstrating how to start these cars without keys went viral, the problem exploded. Instructions spread faster than manufacturers could respond. The economic fallout is clear. Rising insurance claims impact premium costs. Manufacturers respond with service campaigns and software updates. Dealerships and repair shops get busier, but not for reasons anyone would want. Car theft isn't just isolated crime. It's part of a complex economic chain. Theft organization, often coordinated by groups skilled in logistics and resale markets, not lone thieves. Dismantling and resale. Stolen cars are quickly broken down. Parts flow to black and gray markets, sometimes overseas. Distribution and recycling. Buyers range from budget-conscious individuals to repair shops seeking cheap parts. Money laundering. Proceeds are funneled through local schemes, fake repairs, resale companies to clean the cash. This microeconomy has its own pricing, risks, and rules, and it thrives on demand for cheaper parts, creating a vicious cycle. We can't underestimate platforms like TikTok, Instagram, and YouTube. What looks like entertainment, short clips showing easy car theft tricks, is essentially a modern-day how-to guide for criminals. These videos lower the entry barrier, show quick results, and encourage copycats. Social media algorithms favor sensational and simple content. A video showing how to start a Hyundai without a key is perfect for viral spread. It reaches teenagers and, crucially, those motivated to commit crimes. Platforms try to combat this, removing videos, banning accounts, moderating content, but the damage is done. Copies circulate in private channels, spreading instructions far beyond official controls. For insurers, theft isn't just a payout. It shapes pricing, underwriting, and risk management. They consider regional and model-specific theft rates when setting premiums. High theft areas like California see rising rates, with consequences. Higher ownership costs. Insuring vulnerable models costs more. Product offering shifts. Insurers push add-ons, tracking, alarms, discounts for anti-theft devices. Entry barriers rise. Young drivers and renters face hurdles buying policies. Used car market. Cars with theft history lose value and reputation, affecting market liquidity. Meanwhile, demand for protection services, alarms, steering locks, GPS trackers, dash cams surges, creating a sector where legitimate business and shadow markets coexist. Manufacturers react with varying speed and scope. Hyundai and Kia launch service campaigns and free software updates. But software patches are only part of the solution. Other measures include upgrading ignition and starter systems, physical and electronic security improvements, exchange and retrofit programs, offering owners safer modules, owner education, teaching drivers how to protect vehicles and avoid viral pitfalls, collaboration with law enforcement, data sharing, investigation support, technical expertise. These steps cost time and money. The market demands fast fixes, creating opportunities for both legal businesses and criminals. Police face many hurdles. High case volume. Reports outpace capacity for thorough investigations. Cross-jurisdictional gangs. Networks operate across regions, complicating efforts. Tech gaps. Not all departments have advanced tools to trace digital evidence or telematics. Public pressure. Authorities must deliver results amid scrutiny. Many departments focus on priorities: intercepting gangs, monitoring scrapyards, public awareness. But resources are limited and the problem widespread. Technology is a double-edged sword, aiding criminals and defenders alike. Key innovations: telematics and GPS tracking. Boost recovery chances but can be disabled by pros. Next-gen immobilizers. Hardware blocks engine start without correct key signals. Biometric access. Fingerprint, face, or voice recognition reduce keyless theft, still costly and slow to adopt widely. Cloud monitoring and big data. Behavioral analytics, suspicious transaction detection, insurer and police data integration. Blockchain for supply chains. Tracks parts legitimacy, cutting off criminal resale. Each tech has limits: cost, privacy, false alarms, bypass methods. Combined strategies offer real protection. NICB experts and police offer straightforward, effective tips, not marketing fluff. Here's a checklist. Always lock your car, even for a moment. Never leave keys inside. Don't leave the engine running unattended. Park in well-lit, busy areas. Use steering wheel locks or gear locks. Install GPS trackers from trusted providers. Update vehicle software and heed recalls. Avoid sharing how-to theft tricks online. Report thefts immediately to police and insurer. Fleet managers should identify vulnerable models and invest in protections. These steps reduce risk but don't eliminate it. The goal? Make theft harder and less rewarding. Car theft fuels criminal profit but also creates legitimate markets. Insurers bear losses but gain through premiums and add-ons. Manufacturers and service centers spend on recalls but profit from protective upgrades. Security startups see growing demand. Dealers in used car markets proceed cautiously. Stolen vehicle history depresses values but keeps markets active. Owners pay more and face higher risks. Criminal networks profit from theft and parts resale. Long-term, theft risk shapes consumer choices, pushing demand for safer cars and alternative ownership like car sharing. Solutions need tech, law, and society working together. Safety standards for automakers, mandating secure ignition and key systems. Platform responsibility, social media partnering with law enforcement to remove theft guides. Subsidies for protective devices, helping vulnerable populations. Cross-jurisdiction data sharing, unified theft and parts tracking. Public education campaigns, raising awareness and prevention. These require time, political will, and funding, but shift burden from individuals and insurers. Several scenarios loom. Tech suppression, security upgrades and biometrics slash theft rates. Criminal adaptation, hackers shift to cyber attacks on vehicles. Regulatory tightening, laws clamp down on theft aids and enforce protections. Socioeconomic shifts, rising ownership costs and car sharing reshape markets. For businesses, insurers, dealers, security firms, the message is clear. Risk is threat and opportunity. Those who innovate in protection win. Laggards lose trust and money. California's car theft saga is more than crime stats. It mirrors social, tech, and economic currents. A viral TikTok can trigger waves of real thefts. Companies may pour millions into protection, yet still face reputational risks. Governments might toughen laws. Markets will evolve. For individual owners, the takeaway is simple. Discipline and basic precautions save cars. For industry and government, it's a call for systemic, coordinated solutions blending tech, enforcement, and education. California is a hotspot now, but not a dead end. Technology advances, criminals adapt, and our responses, individual and collective, will determine how fast we turn a chronic problem into a manageable risk.